Good morning, traders. Welcome back to the Everyday Growth Advisors live stream, the pre-market rundown and fundamental Wednesday. Welcome back. Good morning, everybody. Hope you guys are having a great week. Definitely been a very slow week in my opinion. Super slow. This is like a slow market rally. And that can mean a couple of things, but let's get the breakdown because we don't know what's about to happen. In fact, I think today we should see some activity, and I'm actually interested to see how today goes. So, appreciate you guys taking the time out to be here, and as usual, let's get it. So today we're going to do a breakdown on Intel a little later. We'll do the pre-market analysis first. I was reading a little bit of the news. Sounds bearish to me. Sounds bearish and some bullish. U.S. warns colleges to divest China stocks on delisting risk. Wow. That's a pretty big headline, man. And I wonder if this has an effect on any Chinese stocks this morning. So let's actually have a look here to see what is going on. Yeah, kind of. Just a little bit of sell-off here on Baba. Let's see, JD. JD was on a tear. Okay, not really that much of an effect there. Not too bad. Okay, well, I guess not that crazy. Back to Intel it is then. I wanted to see if there was actually... Oh, wait a minute. K-Web. That's what we need to look at. K-Web. K-Web's actually up. Wow, okay. By the way, for those of you that don't know and you want to get exposure into China's internet ETF for tech stocks, K-Web is the ETF for you to buy. It's traded on the NYSE ARCA, and you can get exposure to long-term Chinese stocks. This entire ETF gives you exposure to majority of tech companies within China, and that was, I definitely got a piece of this pie on this rally up. So right now, obviously, it's a little far, not like super overvalued, but I would say it's valued above average, right? So definitely don't buy it right now. But all I'm telling you is if you wanted exposure, that's what you want to look for, okay? Okay, back to the news here. Stock futures trim gains ahead of record. Sounds bearish. Gold drops. Okay. And billionaires group loses. Okay. Thailand to arrest activist warning. Wanting curb monarchy powers. Okay. Goldman's 1MDB settlement gives Malaysia much needed debt relief. Alright. Greece reports record cases. Damn, Greece. World's hottest stock gains 9%, another 9% after doubling revenue. Whoa, C Limited. This company just keeps going, huh? Okay. And then on other news on Wall Street Journal, you have Apple finally hitting $2 trillion. Yeah, Apple at $2 trillion leaves no room for error. Okay. S&P 500 up after a record close, and this would be the moment when we are going to attempt to break out into all-time high today, so that will be a interesting move. Let's see what happens there. The latest pain on trade, Wall Street, hedge funds that invested in banks are getting bloodied, and you know what, I don't really see it as a big problem. Personally, I like buying bloodied stocks. They're the best way to make some money. You buy it when people are running away, and then you hold it for a while, and then suddenly you look like a genius, right? Buy the dip. I'm just kidding, guys. You absolutely shouldn't be buying bank stocks right now. They are the absolute worst environment to buy bank stocks, okay? You got to wait for at least a rate hike, and then you can start buying bank stocks. Fed minutes to shed light on central bank strategy. This one's interesting. Let's see what it actually says here. Man, Powell looks like he's been eating good. Minutes from the Fed Reserve will likely shed more information on whether the Fed is going to help businesses further or what's going to happen. And they announced a whole bunch of new policies on July 28, 29. So we'll be waiting patiently for this minutes to see how we're doing. And then deploying tools to spur a faster return on inflation to the central bank's goal of 2%. And so we'll have to see what happens, okay? Let's see, official For now, they're buying 80 billion in treasury every month and 40 billion in mortgage bonds, net of redemptions. Okay, that means they're injecting liquidity into the system as usual through repos. The conclusion of the review. Okay, cool. Economic outlook as well. Yeah, this will be interesting to see. So watch for this news. That may move the markets. If the Fed makes a indication that they will continue with the rate pause and blah blah blah, free money and yada yada, we're gonna keep printing bills, then it's gonna be a bullish situation. So definitely keep an eye on that one. Okay, and the news doesn't sound all that crazy today. It's whatever, right? Not really that interesting. You can't really get a direction from reading the news today. If I were to guess, sounds more bearish than bullish. Well, Wall Street Journal sounds bullish, and then Bloomberg sounds bearish. That's what that sounds like to me. So all in all, looks like a 50-50 split. Welcome into the stream, guys. Hope you're having a great day. Smash the like button. I hope you guys are, ready for the breakdown today. Let's see here. Whoa, lots of ticker breakdowns today. Okay. All right. Morning. Okay, cool. So let's look at the pre-market here. Target up 8% on blockbuster earnings. Did really good. Expected to push their e-commerce business forward. It's kind of accelerated it almost. Who would have thought, right? Target. Well, actually, Target has been positioning themselves for this for a while. Okay. They have been diving into the e-commerce business and kind of consolidating their stores for a while now. In fact, if people remember, the last time Target had a earnings, we did a breakdown on the stream, and if you go back and watch that stream, you'll realize that this was something we saw coming. So, unfortunately, I didn't play the earnings because I don't play earnings in general, but would have been nice to have like a debit spread or something to play the upside, which would have been cool. Okay, Graphic Packaging Holding, no idea what that is. Mercury Systems, Capri Holdings, Axis, Kirby, Franklin. I have no idea what all these companies are. Gilead Sciences down 4%, $65 now. Interesting. Enphase Energy down $2. That's actually, those might be some good ones to look at. AAL here up. Pre-market volume almost hitting about 500,000 shares. Keep track of AAL. It can, moon anytime. This might be one of the ones to watch here. Let's see. Extended hours here. Yeah, still in a bearish trend here. So we'll see what happens. But, it's one of those things that can just pop anytime. So keep an eye on it. Delta up 1% Tesla down. Tesla's just been on a tear. Southwest. So all airlines are up generally. Walmart down. Nvidia. Okay, kind of flat. Whole market's kind of flat. On this side, we have not really done many things. United States stocks. And then, let's see. Any news? Well, not really anything impactful. So we'll see how that turns out. Earnings today. Nvidia is posting earnings. After hours, I'm guessing. Lowe's posted earnings. TJX posted earnings. Target, much better than expected. And yeah. Okay. Interesting. Let's have a look at the heat map and see what's going on here. Refresh this real quick. Charter Communications up 2% in communication sector today. Target up big time. Earnings beat. What is this here? Packer, construction, machinery. Okay, what else is there? Regeneron Pharmaceuticals up 2%. AbbVie up 1.8%. Financials up a little bit today, looking interesting. What is this here? AIG, American International Group. That is, I'm pretty sure it's a diversified financial. Yeah. Okay, and then what is this? Travels Company and Loews. Okay, cool. Keep a watch on the tech today, as well as, I want to say, communication sector, right? Consumer cyclical, not so much. I think these will be two sectors to have a red to green possibly. Let's see what happens. Okay, pre-market rundown with the SPY DIN. Let's see what's going on here. So VIX is still continuing. It kind of spiked up and then it's continuing its downtrend here on the 4-hour chart. See, if you look at it on the 1-hour chart, it looks interesting here. Looks like it wants to make a move up. Okay, and if it does, then what's going to happen? SPY is going to come down. And so this breakout on this is I'm pretty sure that our prophecy from Monday is going to more than likely work out the way that we are expecting it to. And I have already positioned myself to take advantage of that situation. We spoke about it very briefly on Monday, where we spoke about how I see SPY kind of doing a little wave up, break out of this all-time high, and then find a supply zone up here of some kind that's going to push the prices down. We need to very, very desperately retrace back to the 50 moving average in order to catch liquidity. Okay, liquidity is very dry right now. You can see we don't have liquidity. We don't have volatility. Okay, nobody's buying and selling aggressively. Everybody's kind of just chugging along and like chucking shares to each other. It's like, which idiot's going to give out first? So all the hedge funds are looking to each other and they're like, hey, you're going to sell? You're going to sell? You're going to sell? And so nobody's selling yet. We need to wait for that one guy to sell or one guy to buy, or retail traders to see this inch up, inch up, inch up and break out. And then retail traders jump in, and then hedge funds sell into the retail buying, thinking, retail traders are thinking, oh, this just broke all-time high, it's going to go higher. And then hedge funds sell into the rally, completely obliterating all of them. And then a big correction happens. That's more than likely what I see happening. Obviously, I'm not a prophet or anything. I just say that is my logic. Okay, the Dow Jones here will also see a retracement back to the 50 moving average. In that case, down to the bottom channel here. The SPY also will see a retracement down to the bottom channel here, and the Nasdaq, of course, will see a retracement to the bottom channel as well. The Nasdaq is rippity rip. Definitely needs to come down here at some point. Okay, I'm not saying that it will. All I'm saying is, all signs are pointing towards a kind of a wave up and then a wave down very quickly. Okay, so I still hold my stance. I'm already hedged. I have QQQ puts for a month out, September. I also have UVXY calls. Okay, so those are the two things I'm hedging against. I'm hedging against NASDAQ and I'm hedging against SPY. Got them pretty cheaply. I'm okay with being at a slight loss right now. They are insurance contracts. So, okay, let's see. Can we get some likes here? Hey guys, can we get some likes? I'm wondering if we can smash the like button today. I wonder. I don't know if we can, but let's see if we can. That would be nice. I'd appreciate it. You know, so this stream can be shared with other people. Okay, now with Intel, I found a pretty good report by Morningstar that I want to share with you guys. It was actually offered by Robinhood, so I'm willing to go through it with you guys and show you the report. This is the report, and also I wanted to do the intrinsic value calculation with you guys. Oh, where is my intrinsic? There we go. So let's see here. So this is the intrinsic value calculator that I built very long ago, and recently I've kind of updated it a little bit to reflect what I like and what I don't like. So we're going to do this together. I'm going to show you. It says Amazon here, but I'm going to rename this to Intel. Okay, we'll get to this in a second, but let's read this report real quick, and I'm going to show you guys how you can actually, use this calculator or use simple Excel tools to kind of do valuations for you. Okay, a simple Excel sheet you have, and I'm willing to share this information with you because, in all honesty, this Excel sheet took me quite a while to do, to fine tune and everything, and with the guidance of a couple of other traders, I've kind of collaborated with a bunch of other traders to get this calculator to where it is right now. Basically, the white boxes are all you fill in, and everything else is populated for you. Everything that is orange is populated for you. The white boxes is the only thing you fill in, which you can get from the balance sheet. And then the cash flows you can calculate on your own from the balance sheet as well. So that's kind of like what you want to do here. And so we're going to use this as an example. These numbers are off because I was actually doing analysis for a different company here, but it's not actually Amazon. Okay, so let's read this right here. This is the report from Morningstar. Let's read what the bulls and the bears say. So Intel is one of the largest semiconductor companies in the world and holds the lion's share, okay. The firm has sustained its position in the forefront of technology by investing heavily in R&D. This is what we were talking about on Monday, and the trend should continue. I was talking about how Intel has a very big investment in R&D. In fact, it outspends every single other company combined, okay. Intel has made a string of savvy acquisitions to build its AI and automotive offerings, including Altera, Mobileye, Nirvana, and Movidius. The data center group has indirectly benefited from proliferation on mobile devices. Server processor sales will be the main driver of growth in the near future. So they actually do sell a bunch of processing chips for servers, okay? And so cloud growth is going to be the main driver for Intel, okay? Now, Intel is facing the bears now, say. Intel is facing a market in secular decline, the PC market, because gamers, that, as I was mentioning on Monday, that segment is getting saturated, right? We have a saturation of that market, and so it's difficult for Intel to have an increase in sales in that segment, okay? And so it must successfully maintain its technology lead to prevent market share loss to AMD. Now, the inability for Intel to break into the smartphone market at a reasonable level is cause for concern, blah, blah, blah. And then the rise of alternative solutions and data center cause for concern, with NVIDIA's GPUs being leveraged to accelerate server workloads. So it's interestingly enough that Microsoft Azure and AWS both actually use NVIDIA chips. And so they need to really work hard to innovate here, okay? So then you have the business and strategy outlook here. And by the way, this is an analyst, so take whatever that you're reading here with a grain of salt in terms of valuation, okay? With valuation, we're going to do it together. But what is good here is that they've done a bunch of research for you, and then, you don't need to believe the fair value, okay? You can go with your own fair value. With fair values, it's based on assumptions, and so analysts, they usually have pretty wide assumptions, so forget about the evaluation. We'll do that on our own with our own assumptions and see what we come up with and see if we can match up to what the analyst has or doesn't have. Okay, so we'll see what we can come up with on our end. But what we want to read here is what they're saying about the company itself. Okay, let's see here. Okay, cool. All right, so Intel, leader of integrated design, manufacturing microprocessors with the rise of interconnectivity of devices, energy efficient silicon solution to any product, smart and connected, data centers, differentiates itself first and foremost via continued execution of Moore's Law, which is what I spoke about last stream. That's the only company, it's funny how it's mentioned here, it's the only company that actually doubles the amount of transistors on an integrated circuit every 2 years, okay? And so every 2 years, the chips have more power and there's more cost and size improvements, okay? And this scaling advantage is perpetuated through higher peer average R&D and capital expenditure budget that allows it to control the design and manufacturing in an industry where the majority of competition focuses on only one phase. So they had a 7 nanometer chip that they were processing, and then they got into a delay, and then the market said, well, okay, we're going to sell off. And so then they sold off from $62 all the way to $48. Now, what we're trying to ascertain is, was this sell-off oversold? Okay, And I think after doing my analysis, it is oversold. Okay, I think that the delay, even though is significant, doesn't make sense for its stock price to be down 9 or 10%. Okay, personally, I think that it doesn't warrant for a 9 or 10% revenue drop. Okay, so people may buy alternatively from other people, but I don't think it's going to cost them 10% of their revenues. Okay. Okay, so then what was the other thing that I was looking at here? Yeah, so 7 nanometer process delay. We're glad to see that they have a 10 nanometer offering, which is called SuperFin, that enables the largest intranode enhancements Intel has ever achieved. Okay, and so I think it's called the Tiger Lake. Yeah, it's called Tiger Lake. And so it uses an entirely different processing power and a different technology. It's part of the new generation of chips. So this analyst says they're maintaining a $70 fair value estimate for a wide moat, negative moat trend Intel. Okay, despite competitive manufacturing headwinds, we remain positive on Intel's scale in cloud computing and opportunities in automotive, 5G, and artificial intelligence, and we think long-term investors should find current levels attractive. So they are bullish on Intel, and they think that this was not a warranted sell-off. Okay. In addition to transistor enhancements, blah blah blah, the firm also advanced the metal stack that sits on top of the transistors, leveraging new material structures to help the designs realize performance goals of 10 to 20% through these new chips. Now that's I read somewhere that's actually a pretty hard thing to do. Okay. All right. So from here, well, let's just skip all over this because it sounds like they are talking a lot about very technical things that we may not understand. And what was the thing that I wanted to talk about was risk. Yes. Risk. We talk about risk. The cyclical industry in which Intel operates will cause its profitability to fluctuate regardless of how successful it is in its processors to new markets. This is the important thing here, right? And what was the other thing? It was about AMD, okay? If AMD captures the market share, then Intel will be screwed. So it needs to make sure that Intel maintains the lead, okay? That's what the issue is here. That's the reason why people are selling the stock and running for the hills, okay? So as far as the company goes, though, financials are solid, okay? Financials are really solid. There's a past analyst notes here. Looking at the financials here, we can see the sector median for PE ratios is 21. The 5-year average of this stock is 15, and the current PE ratio is 9. We're way below the sector median, which is 21. It's almost half, actually. So the forward PE is also very, very attractive here. The price to earnings ratio here tells you how expensive the stock is versus the sector. And I think I like this. For a company that delivers 30% return on equity and 16% return on assets, I think that is a solid valuation. Okay. Okay. 10-year revenue growth has been about 7%, operating income at about 14%, earnings at 19-20%, dividends 8%, book value and stock total return is 11%. Okay. All pretty solid. Okay, so let's do our own intrinsic value calculation here. So we're going to do Intel Inc. and the ticker symbol is going to be INTC. And so we want the operating cash flow. What we're going to do is go to Morningstar. And we're going to go search for Intel. And we're going to head over to financials here and pull whatever data that we need to put into here. So we want the operating cash flow, which is going to come from the statement of operations. The statement of cash flow here. And the operating cash flow here for, let's just take the trailing 12 months operating cash flow, which is actually to be fair, let's go with the 2019 values instead of going the trailing 12 months, because I feel like it may be a little unfair to take that value. So let's see here. Yeah, let's go with the 2019 values here, so that we can value the stock properly as of the book close. So 3315, that's in billions. So that is going to be times 1,000. So 33150. 33150. Okay, total debt. So we're going to go back here and we're going to find financials again and find the total debt here. Total debt at 2636. So 26360. 26360, because we're doing all this in millions. Okay, cash and short-term equivalent, so 1165. So 11650. 11650. Okay, and then in a second here we'll figure out what these growth rates are. Let's find out the number of shares outstanding. And so, okay, Intel, here we go, 4473, that's in millions, so we don't really make any adjustments. 4473, okay, perfect. Now we need to figure out the growth rate. So what we're going to do here is go and find the, let's say we can find it here. Cash flows should be, price ratios, no, margins. Let's see, other metrics, no. Financials, maybe here. Cash flow statement. Okay, we're going to go to cash flows from operating activities. There we go. Okay, and so we're going to copy this whole thing for the past 10 years. So all the way to 2009. And we're going to paste it right here. Okay, and what we're going to do is format this so it looks good. And then we're going to format this so that it looks good. And so all these formulas here, you can see what it does over here is my Excel sheet takes the difference between this year and spits out this value. So this year minus this year gives you this value. And so the growth between this year and this year is going to be 49%, which is going to be simply this year divided by this year, right? And so then it gives you the growth rate for all of the years, okay, all the way up to 2019. Then what you do, this formula here takes the aggregate of all of these rows here. So a simple little Excel sheet, not really crazy or anything. And that spits us a 12.83% growth rate average for 10 years. So let's assume that for the next 3 years that they will grow at about 15%. Okay. And then after 3 years, they will start growing at 12%. Okay. So that gives us that. And then, by the way, this accounting period is going to start 2019. So this will be 2020. And then we need to find the discount rate. And that's when we can go and look at Finbox. Okay. So we want to go find out the discount rate, which is going to be between 9, 9.5, 10. So Finbox does that already. So 9, 9.5, 10. We'll go 9, 9.5, and 10. Okay, perfect. All right, so based on our intrinsic valuation, we find that everything else is done for you, by the way. So this is the present value, and what this simply means, we're going to take the sum of all values here. So this entire thing is populated on its own. When you put in this year, this populates on its own, all the years gets added, whatever your starting year is. The cash flow projected is simply going to be the operating cash flow times the growth rate for the first 3 years, and then the next years will be multiplied by this growth rate over here, 12%. So then we have a discount factor, which is using these 3 discount rates. So the first year will be discounted at 9%, second year 9%, third year 9%, and then the fourth year at 9.5, 9.5, 9.5, and then 10, 10, 10. So we'll get a discount of total of 85% there. And then the discounted values will give us the sum, which makes up the present value of the 10-year cash flow, plus the operating cash flow currently gives us. And then we take that divided by the number of shares which are outstanding, gives us the intrinsic value before cash and debt. We reduce the amount of debt, which is the total number of debt divided by the number of shares outstanding, and then we add the cash on hand currently, which is right there, And that gives us the final intrinsic valuation for the business at $60.25. Now, remember that this calculator is a bit conservative, and I purposely make it conservative because I want to reflect a realistic valuation of Intel. Okay, so $60 seems to be the fair value estimate of this business based on 2019 cash flows. All right. Okay. Now, Finbox has a $69 fair valuation, and the report that we read has a $70 fair valuation. So I say we're in the ballpark, right? I say we're in a nice little ballpark, okay? And so I feel like our valuation may be around the nice ballpark range. I think taking an aggregate of $65 would be a fair value for Intel's upside. Okay, so is this stock intrinsically undervalued? Absolutely, it is. Okay, and then do we need to do more analysis on this? Well, possibly, but you can see we're kind of forming up this nice little channel here, and we'll see where this goes. But oops. We'll see if we can kind of break above this over here. So okay, I'm just gonna leave that like that and see where it goes from there. I say a retracement to the 50% retracement here, 54.54 is definitely likely, and then the 61.8 at $56 is also likely. So these two will be my target 1 and target 2. We'll say here and oops, and here. I think target 1 here and then target 2 here. Those should be the levels that we're looking at. So I am long-term bullish on this company because of the fact that the fundamentals are good, but then we also have to wait for that momentum push up and see when people start buying these shares. Okay, so that is the fundamental breakdown of Intel here. Looking at the valuation, Finbox has it a little differently. They have a growth rate of 4% this year, and then next year a loss, and then kind of a weird revenue growth rate here. I'm not sure how they get these values sometimes. And then their capex is at about 20%, and then it grows and then dies off. I see capex actually increasing. That's the reason why I don't like to do a revenue exit multiple. I like to do my own DCF because I just take into account the cash flow, which is much more simpler and goes off less assumptions. Okay, it's more raw. And then the working capital they have depreciation and amortization at 14%, a tax rate, discount rate. This is the only thing that I like to use from them. And then the terminal value with a revenue exit multiple. So, I mean, not like I disagree with them. Still pretty fairly close to what Morningstar has rated them. And then my estimate is a bit more conservative. Now, in terms of financials here, looking at the stock. By the way, are you guys enjoying the stream so far? Because I can't tell. You guys are super quiet today. By the way, if you're here today, smash the like button. I appreciate you guys being here. This is kind of like how we do the fundamental analysis on Wednesday. I know it's a little dry, but that's how valuations are. It's kind of like very mathematics and very based on assumptions. You're going off logic and lots of principles that so I try to make it as palatable as possible. I'm sorry if it's a little dry, but that's just the way things go. But I appreciate you guys sticking with me here. So welcome to the stream if you're here for the first time. And if you're here, a returning member, welcome back. I appreciate you guys being here. Okay, from the financials perspective, return on invested capital at 21%, return on equity at 30%. That's pretty decent for a company that's growing and has been around for 30 years or so. Net margins at 29-30%. That's hella good. Return on assets 16%. Revenues at 6% here, growing over 3 years annualized. And then they are returning positive net diluted EPS, which is great, net income and operating income. Quick ratio here at about 1.48, so they have more assets to service their debt. And so far, current ratio as well, quick ratio, taking into account inventory there. And then the interest coverage ratio. Look at this interest coverage ratio, okay? They can pay whatever interest that they have 51 times. That is great. And healthy debt levels as well. This company is solid, okay? It's a solid company. PE ratio at 9 with the industry standard at 21, okay? This is a severely undervalued business at this point, okay? A severely undervalued business with a good economic moat. And it's a leader within its sector, so don't think they won't innovate, okay? AMD might be, for the time, taking over, but I think that this company long-term, buying shares, holding them will pay off, okay? Dividends, it will pay off big time. Okay, I am officially done with the valuation and the fundamentals of this business. All right, let me read some of these comments here. Okay. Yes, it's great. Thank you. Yes, enjoying listening. Okay. This is good. A lot to digest. Yeah, Amy, I know. Sometimes it can be dry. I'm sorry, but that's just the way these things are. And it's unfortunate because only when analysts talk to each other, then we're like, oh, yeah, really? Oh, that's your assumption? Oh, okay. And we try to figure out why your assumption's different from mine. I feel like when two analysts talk to each other, we get really animated. And then when a finance person talks to a non-finance person, they're like, yeah, you sound crazy, dude. So I'm sorry if it's dry, but that's just the way things go. Okay. It's good. Keep on going. Okay, great. Thank you. This fundamental analysis is awesome. Thank you, Nguyen. Appreciate that. Definitely been thinking about getting into Intel. Thanks for the confirmation. Righty. Awesome. Can we get the Excel you made? Ooh, man. You're really trying to ask me for this Excel right now? Dude, do you know how long it took me? It took me 29 years to build this, man. 29 years. Do you know that? That's how old I am. It took me 29... No, I'm just kidding. Yeah, you can have it. Is there something that I don't share with you guys? Come on. Do you know me? Have you been to the stream before? Everything is free. Everything, man. Everything. I never not share something, okay? If I have something, it's yours. It's free. Irregardless of the effort it took to make it. But just make sure that you know how to use it. As I said, it's pretty simple, right? You saw me do the breakdown. If anything, you can get these values from wherever that you need to, right? But yeah, absolutely, you can have it. I'll figure out a way to post it so that everybody can access it. And maybe I will kind of put it on a Google Drive or something and post the link in... maybe I'll post the link on this description video. And oh wait, I don't think YouTube's gonna allow me to do that. Let me see. What's the best way for me to do this? Well, I could put in the Discord and then, or yeah, a Google Drive would probably work, right? A Google Drive link. Or is there like oh wait, can somebody recommend me like a website where I can just drop a Excel file and share with you guys or something? Put in the comment, okay? While I do the ticker breakdowns. It's really a great model. Cash flows are better valuation versus revenue. Absolutely agree with that. I definitely like to do cash flows more because it's more reflective of the company's growth rate, right? You want to do cash flows from operations because that's more reflective of the cash flows that the company brings in through its business. Okay, revenues not so much. Doesn't take into account a couple of other things that would skew your assumption. Okay. Okay. So share via Twitter. Ooh, maybe I can do that. Actually, that's a good idea. Okay, if everybody has access to my Twitter, I will post it on... Wait, does Twitter let you do that, though? Let's see. Can I do that? Link. Dropbox. Okay, let's see. Oops. Let me see if I can just get this done really quickly so that I don't forget to do it. Oh, damn. I have to sign up and all that. Ugh. Okay, how about this? Everybody follow me on Twitter. I'll post the link on Twitter and then you can go grab it, okay? My Twitter handle is EGA Learn. Very easy. EGA Learn. By the way, I also post charts here. Majority of the time, you can look for my market updates. I usually, like, while I'm trading and I see a nice setup, I also kind of post charts here and I'll say, oh, look, it's a nice bull flag. And this one was something that I posted yesterday, Zoom. I predicted that, or not really predicted, but it's more like my analysis for the upside here. Nice little bull flag breakout here. And I wanted to see how this would play out to the upside. I haven't actually looked at it right now, so let's see what actually happened here. Oh, it's almost like Christmas. Look at that. Perfect. It's perfect. Look at that. Wow, it even followed the arc. That's crazy. Okay, then. I see you, Zoom. Let's see. Yeah, I think, nice little wave up and then a wave down and then another wave up here should be the move here with Zoom. So looking to get in on the next wave down. That would be the nice little entry point there. A breakout of this all-time high. That would be the nice little cake there. Okay. Post a Google Drive link. Google Dropbox. Okay. Okay. This is far. Maybe share a link to my Instagram. Link on Instagram. I don't think they allow you to share links on Instagram. Okay, guys, don't worry. I'm gonna figure out a way to do it. What I'll do is just follow the Twitter account for the link. Okay, I'll post the link on the Twitter account for how you can get the file. Okay, and then you can go and access it whenever you like, and that'll be it. It's just much easier that way. I'll either put a Google Drive link or I'll put a Dropbox link. Okay, and then you guys can go take the intrinsic value calculator. Just make sure you don't mess it up. Okay, look, there's 2 sheets here. If you want to do a new valuation, all you do is right click and press move or copy, and then move to end, and then press OK, and then wait a minute. Move or copy, and then just create a copy of XOM. Wait, I just did it, man. Oh, there we go. Create a copy, press that, and then boom, you can have it there. Okay, and then you can move that to the end, and that will put it at the end, and then you can rename this to whatever you want, and then just open up multiple tabs as you go along, so that you have the valuations whenever you need it. Okay. And then make the amendments whenever you want. Okay, so that's the thing. And make sure that you amend the current year here. So all the white boxes are what you need to amend. Okay, the discount rate, usually, I like using Finbox. And generally speaking, the discount rate is the weighted average cost of capital. Okay, and the weighted average cost of capital is generally between 9 and 10% for most companies. With the exception of very intensive businesses like Amazon and Walmart and companies with a lot of inventory, a lot of moving parts, a lot of distribution, then the weighted average cost of capital goes up a little bit. Like with Amazon, I would assume a weighted average cost of capital, the discount rate, to be on a high side, like 11 to 13%. Okay, but then they have significant more revenues as well, so that would be what you would have to kind of look out for. Okay. So make sure you get the discount rate right. Majority of the time, it's going to be 9 to 10%, but others, you need to also do that. Make sure you do the cash flow projection here and then get the average growth rate here as well. Really simple Excel sheet, in my opinion. So I'm going to just do a nice little... I'll clean up the sheet and then upload it for you guys so that you have access to it. Okay, cool. Alrighty. Okay. This is fire, man. Maybe share a link. Okay. I'm 31 years old and your league's ahead. I'm humbled to be able to learn from you. Dude, Thomas, don't say that, man. Everyone starts somewhere. I started somewhere, and it's a process. You just gotta study and keep learning, and that's the name of the game. That's the reason why Everyday Growth Advisors was created. And I think that when you turn up here, we are all learning. So it's a process. Okay. AMD calls. Okay, let's see. Let's look at the tickers. We have 15 minutes. I'm sure we can go through all of them. Okay, let's see. Boom, boom, boom. CRM. I like this one. Looking to sell prior to earnings next week on IV jump. We'll enter today on the dip to 250. Looking to run up to test 210. Okay, I like your style. I like your idea. I myself played CRM just a day or two ago. Okay, 210. Looking nice. Yes, I agree with your sentiment. And I think that your judgment is right. And I think that you should wait for a wave down and then enter. Absolutely. Agreed with you. And I think that you chose the right contract as well, Chris. That is a beautiful, beautiful call out and a beautiful, beautiful idea. One of the best ones that I've seen on this stream so far. Just saying, Chris. And that's saying a lot. AMD, 100 call. Okay, 1016. Do you think NVIDIA earnings will have a drastic effect on AMD underlying? Absolutely it will. So let's have a look. AMD 100 call, you're saying for October. Okay. Yes, it will. If NVIDIA beats earnings, expect AMD to kind of rise on a sympathy. That's what usually happens. 100 call. Ooh, your strike might be a bit high, but it is for October. And it's not like AMD can't move. So to this I say that the strike might be a little high, that's all. I think that you could go for a more conservative strike, like maybe 95 or even 90. That's more realistic than 100. That's my opinion. FL, Foot Locker, 2850 calls for January 15th. This company is probably going to file for bankruptcy soon. I just have a feeling. I don't know how they're going to survive. I see what you're thinking though. This is more like a swing play with a nice little demand zone here. I see that. I see you with your idea. I see the case, but I don't know if I can really commit to this idea because of the fundamental of the business. I just don't see it recovering very strongly. That's the thing. But then from a technical standpoint, it looks good. So I'm kind of mixed about this one, unfortunately, Jason. But it's a good prospect for a swing trade. That's what I would say from technical standpoint. Okay, CVX 97 call 1016 CVX Chevron. So this is going off our ExxonMobil play. I like this one. Look at the volume nicely increasing there. Let's have a look actually to see what's going on. A little volume flowing out, a little volume flowing in. Let's see. Recently went bearish here, so we're looking for a rebound possibly. Nice little swing trade opportunity possibly, but I think it has to come down to 85 before it does that. So maybe you're looking at a little bit of a delayed reaction here from this. I think October is fine. You may need to hold it for a while though and roll it out. Excuse me. Ooh, damn. So if Tesla price is 2,000 this Friday, it doesn't matter if it's 4,000 or 1,000 next week. We'll still be split 1.1:5, aka $400, right? Whoa. Okay, I think what you're asking is if it's $2,000 and it's split by 5, will you get 400? Yes, that's correct. Also, can you still buy and sell Tesla shares next week? You can buy and sell Tesla shares anytime. Just that when the split occurs, then your shares become from 1 into 5. So for every 1 share you now have 4 additional shares. TSM 918 100 call or 90 call for 918 and 100 call for this. Thanks in advance. Okay, let's see TSM. I like TSM, by the way. Looking nice. It's consolidating, but the problem with this one is, I think somebody asked me about this yesterday on the stream or something. It was this consolidation has me a little worried because I feel like so it is considered a kind of a flag here. Okay, I do see a flag pattern. But I kind of want to wait for this thing to come down to the moving average before I buy it. So the real thing here to look out for on TSM is a breakout of this flag. And obviously I drew it very roughly here, but you can see what I mean. If it breaks to the upside or downside, you can see it's kind of coiling into this flag. So wherever it breaks to the up or the down, that's where the direction it's going to go. And just from the way the volume is going over here, I have a feeling that it's going to break to the downside and try and test the support over here with the 77 range. Okay, so that's what I feel. Then I would enter some calls. Okay. Warrenboro holding these two calls. What do you think about them? DocQ 821. Geez, is it for this week expiry? Yeah, it is this week expiry. Man, you guys really love these weekly expiries. By the way, you do realize you're holding a contract that expires this week. It's gonna, if it's not even remotely close to being in the money, you're gonna be losing money on it. Just so you know. So before I even look at this, 209. Oh man. Yeah, that's a tough one, man. I mean, looks like it, but then I'd say that your strike is a bit too far, and over today, after lunch, your contract's gonna really suffer some big losses. That's what I say. Because after lunch is when theta is gonna start being priced in here. PayPal 821, 197.50. By the way, guys, I think many people have a misconception about theta, okay? I think you think that it's something that happens to the option, like, based on some magical fairy that comes in and crushes the option premium. Theta is usually caused by sellers who also think, traders who also are aware that theta is going to be drained. Okay, so if your contract price goes down, sometimes it can be a self-fulfilling prophecy where traders are expecting theta to be drained, causing the IV to depress. Okay, so I hope you guys understand that concept. PayPal 821, 197. Okay, 197. Once again, another one of those situations. Very low volume too. I don't know, man. This one, another tough one. It's like volume looks down, pointing down, looks bearish to me instead of bullish. I think you should cut both of these contracts today and live to fight another day. That's what I would recommend. Yep, and there you go. They're both bleeding since yesterday because theta is starting to be priced in. UVXY, what strike time frame do you have? For UVXY, I have the $28 calls for UVXY, and I have the September 25 for UVXY. MU 1016 $55 calls. I don't think I'll get to all the tickers today, but I'll try to do. Oh boy, man. Man, this is terrible. I'm not sure why you would buy calls on this right now, but Nishit, I hope that you, like, 55 is way up here. You're expecting a recovery to here by when? October. Okay. I have a bad feeling about that, man. The trend is your friend. Try not to bet against it. Okay. Let's see. Let me see if I can answer any questions apart from tickers here. Okay. Once again, guys, if you want the Excel sheet that I'm about to share, I'm going to post it on my Twitter. So if you want, go follow EJ Learn. That's the Twitter handle that you have to follow in order to get the Excel sheet, which I'll put out later. Okay, I don't think I can do the rest of the tickers, but I will try to answer as many questions as I can over here. Check out Spot or Shop. Spot or Shop. What's up with that one on? Spot or Shop. Shopify looks interesting. Spotify though? Not really. This one's, oh, maybe you're asking me to look on a bigger time frame. I don't know. Nice bounce play, you say? Maybe back to 290. Is that what you're saying? I don't know. I don't see it happening. Not very soon-ish. It is forming a nice little cup here though. We'll see. Shopify looks better though. Nice little gap to fill here at $1,100. I think that's a good one. Let's see here. Oh yes, I wanted to discuss Facebook. That's another one I'm looking at, by the way, guys. Facebook's another one I'm looking at. Looking very bullish here. And yesterday we tried to kind of break out here. It's formed this really weird, a kind of a triangle. I don't know how to call it. It's not really a perfect triangle, but it broke out of it. It's a pretty weird triangle, to be honest. But it kind of looks like a flag, but it's not really a flag. You can see it. It's kind of a ascending triangle that's broken out of. So this is something I'm watching today to play to the upside. And I don't know if it's up after hours. Let's see here. Yeah, not really. I will post updates on Twitter about this one today. I like the prospect of it being a bounce play on the 50 moving average on the 1 hour chart, and then has this huge gap to fill up to 278. That's a nice $12 move up to the upside, which I really like over here. So Facebook will be one to watch. Wait for the watch out for the updates on Twitter. I will put out updates there. What are the top indicators you recommend to use? Moving averages, support, resistance, volumes, 2 types of volumes. That's the ones I use. I don't go crazy and have a whole bunch of them. Basic patterns work the best in my opinion. Learn your patterns well, cup and handles, breakouts of flags, pennants, ascending triangles, descending triangles, bear flags. Those are the ones that I commonly look for. And then channels and ascending channels, descending channels, sideways channels. Yeah. That's pretty much all that I use. The relative strength index, if you really are on a shorter time frame, like 15 minutes, that works on 15 minutes. But as I say to every one of my mentees, RSI is not a very good tool, because look what happens even when it is reading overbought at 70 here. It can still push up over here. See, it's overbought, and then boom, look, it goes even higher and higher and higher and higher, higher, and it can go all the way to 89, 90 even. So not a very good indicator, but you can use it on the 15-minute to make kind of a good assumption. Okay, so I feel like we covered a whole bunch of stuff today, and I hope that you guys enjoyed the live stream. Tomorrow we'll be having a webinar once again on how to day trade. Okay, the webinar link is already up. I hope that you guys have a great day. Make sure you tune in tomorrow for the webinar. It's going to be a free lesson on the house by yours truly. So with that, I leave you to your trading day. Thank you for tuning in. Have a good one. Watch out for the Excel sheet on Twitter. Bye-bye.